A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a surprising turn of events, the U.S. labor market has shown signs of significant cooling, as the Labor Department reported that employers added just 22,000 jobs last month. This figure marks a sharp decline from the 79,000 jobs added in July, raising concerns about the overall health of the economy. The unemployment rate has also seen a slight uptick, rising to 4.3%. The report has ignited discussions about the implications of President Donald Trump's economic policies, particularly in light of ongoing uncertainties surrounding tariffs and trade wars. President Trump, known for his contentious relationship with economic data, previously reacted with anger to disappointing job reports, even going so far as to fire the economist responsible for compiling these statistics. In a recent dinner with tech executives, Trump appeared to downplay the significance of the current job numbers, suggesting that the real impact would only be felt in the future. The weak job report has had immediate effects on the financial markets, with stocks rising and bond yields falling. Futures for the S&P 500 and Nasdaq have seen gains, supported by strong earnings from companies like Broadcom. Analysts believe that the slowdown in job growth could bolster the Federal Reserve's case for cutting interest rates, a move that could lower borrowing costs across the economy. This potential rate cut is expected to be discussed at the Fed's upcoming meeting on September 16th to 17th. Meanwhile, the job report highlights troubling trends in various sectors. Manufacturing has been particularly hard hit, shedding 12,000 jobs for the fourth consecutive month, while construction companies cut 7,000 jobs. The federal government also laid off 15,000 workers, and revisions to previous reports have cut an alarming 21,000 jobs from June and July totals. Despite these challenges, workers' average hourly earnings did see a modest increase of 0.3% from July and 3.7% from August 2024, aligning with forecasts. In a related story, South Korea has expressed concern over a recent U.S. immigration raid at Hyundai's Georgia plant, where a significant number of South Koreans were reportedly detained. The South Korean Foreign Ministry has described the situation as regrettable, although exact numbers remain unconfirmed. This raid is part of a broader trend of aggressive immigration enforcement under the Trump administration, which has targeted various industries for compliance checks. Additionally, the administration is now investigating Medicaid's spending on immigrants in Democratic-led states, focusing on potential waste and fraud in healthcare services for undocumented individuals. The labor market's momentum has noticeably slowed this year, attributed to the cumulative effects of multiple interest rate hikes by the Federal Reserve and the uncertainties stemming from Trump's trade policies. The economy has averaged just 85,000 new jobs per month in 2025, a stark decline from the 168,000 average in 2024 and a staggering 400,000 during the post-COVID recovery period. Heather Long, chief economist at Navy Federal Credit Union, noted that while the labor market is not in crisis yet, there are increasing signs that businesses are beginning to cut back on hiring. The upcoming midterm elections and the potential for Trump's re-election will likely shape future economic policies and their impact on the job market. As the nation watches closely, the interplay between economic data and political decisions remains a critical focus for both policymakers and the public. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.